You hear it time and time again. The market is up or the market is down. You might hear about the market from coworkers, friends, from strangers passing by, or from daily news sources. You know they are referring to the stock market. But what exactly is the stock market? And why is it so important? These are the questions I aim to address in this video. If you enjoy this type of content and would like to see more videos from this channel, please consider giving this video a like, sharing the video, and subscribing. First, let's talk about the history of the stock market. How did it start? The history of the stock market begins back in the 1300s with Venetian moneylenders, but instead, we will start our story in the 1600s with the first modern stock trading company, the Dutch East India Company. The Dutch East India Company had hundreds of ships that would obtain goods such as spices, porcelain, silks, and even gold. But these operations were not cheap. To fund these voyages, the Dutch East India Company turned to private citizens for funding and offered shares of the voyage in return. By having private citizens invest into each voyage, this helped diversify the risk of a voyage over a large group of people, instead of only a handful. If a ship was lost at sea or sank, everyone that invested in the voyage would take a hit proportionate to their investment. But when the Dutch East India Company successfully made money from a voyage, all investors would proportionately share in the profits. Those who invested more of their money would incur more of the risk. In turn, that risk could lead to a major loss of personal capital or large rewards for successful voyages. Our modern-day stock market system works in a similar fashion today. So what exactly is the stock market? The stock market is where investors can go to buy and sell shares of publicly traded companies. Before the internet and smartphones took over the world, the stock market was accessible by contacting a stockbroker that would buy and sell stock for you. The stockbroker would invest your money by relaying that information to a physical location, like the New York Stock Exchange on Wall Street in New York City. But the stock market is more than one single location. It is actually a network of stock exchanges across the world with centralized hubs. You can think of these stock exchanges as airports. Countries with large market caps have large airports, and countries with small market caps have small airports. Some examples of stock exchanges are the New York Stock Exchange, NASDAQ, Japan Exchange Group, London Stock Exchange, and Hong Kong Stock Exchange. Why is the stock market important? The stock market is crucial in a modern economy, and the benefits and risks apply to both the investors and the company. The stock market allows companies to raise money by offering stock shares and corporate bonds. The stock market allows the everyday investor to participate in the financial achievements of a company. But not all companies succeed, and the investors will also share in the company's losses. When a person invests into a company, they don't just become a shareholder, they become a partial owner of that company. This comes with the positives and negatives that companies have to offer. If there is a company you admire or wish to own a part of, then the stock market is the right place for you. Let's say you really love Apple. You like their phones, laptops, desktop computers, headphones, software, and everything else the company has to offer. You can purchase Apple stock through the stock market and become a partial owner of the company. Even if you were to purchase only one share of the company, you are still considered a partial owner of Apple. If Apple continues to grow, reaches their company goals, and generates money, your shares of Apple can rise in value. You will participate in the financial achievements of Apple. But let's say some bad news comes out about Apple. For example, Apple could release a terrible product that malfunctions regularly. The news of this product will circulate. Investors may be wary of Apple's current trajectory, and they may decide to sell their shares. If that's the case, then Apple's share price will fall and the shares you hold will incur a loss in value. Just like any other system, the stock market is far from perfect. It has its ups and downs, but it gives everyone an opportunity to support the publicly traded companies they truly believe in. A famous investor and Warren Buffett's mentor, Benjamin Graham, has a saying, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." On a day-to-day basis, the market value of a company may go up or down, but over years, the true value of a company will show. Weak companies will be removed through competition, and the strong companies will thrive. Invest wisely, and you too can share in the financial achievements of great companies. That brings us to the end of this video. I hope from this video you obtained a basic understanding of what the stock market is and why it is important. If you enjoyed the content, please consider leaving a like, sharing the video with a friend, and subscribing for future content. Also consider checking out some of the other videos on the channel. Thank you, and I'll see you in the next video.